Right. Good morning, ladies and gentlemen, boys and girls. My name is Manish Dhawan. I am partner at INFLO and Mystic Wealth. INFLO is a corporate mutual fund distributor, and Mystic Wealth is a PMS distributor. We primarily distribute our own PMS, which is Mystic Wealth Momentum and Mystic Wealth Value. The topic of today's presentation is the Korean market bubble of 2026. And this is a fascinating thing that is unfolding. I was having an offline conversation that we live in unprecedented times. Decade का सारा price action basically within months में हो रहा है. And there's some pendulum shift or paradigm shift that has happened post 2020. I'm sure you will agree to this. 2020 से पहले की दुनिया काफी स्लो थी. ये 2020 के बाद somehow the clock has changed. मतलब क्या नहीं हुआ? It started with Corona, of course. At least I have not seen so many deaths around prior to Corona. My mom's three friends passed away just like that. I'm sure every family has stories around that. Then vaccine, फिर vaccine का drama. Then the vaccine was forced upon people. Then the side effects of the vaccine, and that was sidelined. मतलब कमाल ही हो रहा है. Then there are wars happening, the Russia-Ukraine war, the US war, and then the stock market is gyrating like crazy. पहले 2020 का crash, and then exact lockdown date पे was the bottom, and then crazy recovery, and then a proper bull run of 2021. I mean, the Trump के tariff tantrums, the silver ka up and down. We are actually living in unprecedented times. There is no doubt about it. Price actions are compressed. सब कुछ अभी हो रहा है. We saw the silver में 20 साल में ऐसा move नहीं हुआ जैसा अभी हुआ. Crazy up move and then a crazy crash. Natural gas showed the same thing. Me and Varanya were looking at that chart. I remember a महीना पहले, and that it's like reeling in the bottom. वो एक महीने में वापस न्यू हाई मार गया. Amazing. I don't know how many of you have listened to this guy, Bill Lawry. He was a commentator, Australian commentator, cricket commentator. And उसका एक favorite dialogue हुआ करता था. He used to say, drama at the waka, it's all happening. I mean, this precisely fits the bill here. It's all happening in the stock market. The latest is the Korean market bubble, and that's what we'll talk about today. So basically, we'll cover the rise, parabolic rally hui kaise, the fuel, kyun hua ye, the turn, the exact date, July 13th, which was a clear telltale sign, by the way, people who are into the world of situational awareness, they could have exited in time. Then the cascade, how deleveraging happened and crazy fall followed. We will do a small case study. What if it happens in India? And we'll talk about the situational awareness hedge fund, what an ironical name, and how they blew up and where things stand today. Now, the parabolic rally. I'm not going to spend too much time on this. आप सबको पहले से ही पता है कि क्या हुआ है. Varanya actually cracked a very interesting dating joke. If you got a chance to listen to the or read the newsletter that we sent yesterday, you would see the dating joke is that guys are now getting judged or were getting judged in Korea based on whether they had a long position in the country's AI, the two companies, Samsung and the other one. So
It's not a joke. It's a fact. This is a story I read.
yeah, and of course it's you can totally relate with it. If your country is growing like crazy, there's a basically vertical base. आप ये chart पे देखो, they started the year with 4245. Okay, and within 6 months, the damn thing has gone 121%. That's the index itself. Uh, and what we are going to discuss about this is, and we've talked about it earlier as well, you have to watch the slope very carefully. People have coded this as well in their algorithms. As long as the growth or the bull run is happening in a 45-degree curve, it's fine. But the moment it starts going, I don't know if my mouse is visible. The moment it starts going like this move is crazy. And this is where it goes parabolic, and you should be tightening your stops and be ready for a quick exit. That's when it stops being a normal rally and it goes parabolic. This shape on its own should have been the first warning sign. So, best performing major market in the world, uh, and South Korea actually exceeding India in the market cap. These are all those magazine cover points where they should have been careful. But why are they not careful? We'll talk about that. See, this is where the problem was. First, we'll do the right hand side and then the left hand side, the good things. Again, this was a joke I was cracking with Daya. See, my partner does what is called management as a change theme for on stocks. He's done well picking up stocks जिनमें management change हुआ है, open offers आई हैं, नई management की वजह से perception change हो गई and the company has done really well. Funny thing, it works in countries as well. So June 2025, South Korea itself had management as a change as a theme. President Lee Jae-myung took office, and not only took office, he basically unleashed the animal spirits. He did a couple of very interesting reforms. Corporate governance का जो bad tag लगा था, he removed that, and also कुछ dividend पे भी उन्होंने tax reform किया. All this led to a pretty interesting base was set for a rally, and then Sone pe Suhaga, the AI boom happened, and the memory chip manufacturers Samsung and Hynix basically catapulted the whole game. ये तो good part है. The sad part was ये दो stocks ही उनका सारा index है. It was 40% when it all started, became 60%. Combined weight of Samsung and SK Hynix in the cost P up from roughly 40% to 60%, which is huge. Practically, दो companies ही decide कर रही हैं. You got to praise SEBI here. How can you? I mean, I don't know. In hindsight, we can discuss this. How can you have an index which is heavy on just two stocks? Of course, it's ripe for manipulation. And so at least SEBI is mature enough to create structures and indices in India जो इतने easily manipulate नहीं हो सकते. That's like concentration risk hiding inside what looks like a broad rally. अब कहने को कह रहे कि index 121% rally हुआ है, but 70% of that rally has happened because of just two stocks. Now, I tweeted this. How can this price action lead to suicides and bankruptcies? I see at least three positive swing trades if I deploy my MWM system on this. This would have been profitable trade. Now, the thing is, ये बोलना आसान है. The point is the difference is leverage. Leverage is the thing that blows people up, not the usual vicissitudes. See, like for example, silver trade we know went bad for a lot of retail investors. I know this for a fact because of the very simple statistic that January, May, which was the peak, 2/3 of the ETFs were sold. तो सारे के सारे लोग गलत टाइम पे ही एंटर कर गए. Point taken. But guess what? उससे भी blow up नहीं होगा. Because नुकसान होगा. Of course, retail का काफी नुकसान हुआ silver में. But they did not blow up because they were not leveraged. The only time you get rogered in the stock market is when you're levered. Otherwise, you live to tell the story. A sad story maybe, but you still live to tell the story. See, because the upward bias will ensure that you will make money in the long run in stock markets, as long as you're not leveraged. And this is where the whole thing fell apart. Look at the leverage. 38.63 trillion won, which is the currency of Korea, was the margin loans that were deployed when this Korean frenzy was happening. By the way, two out of these three things, as we speak, I'm not trying to predict anything or anything. You draw your own conclusions. Two out of these three things are applicable in India as well. Margin funding is going crazy in India as well as we speak. नितिन कामत का लेटेस्ट ट्वीट आपने देखा होगा। जब से ऑप्शंस का मार्केट टाइट किया है, people have moved to a newer game in town, which is margin trading. I don't remember the exact figures, but it's pretty crazy. It's at all-time high for sure. And the third point, 148 trillion net Korean equity sold by foreign investors, a record even as the index double. Smart money was exiting. And by the way, the same thing is happening in India. FIIs पिछले 2 साल से unprecedented amount of money they are selling as well. The third is not true yet, which whenever it happens, you should have your antenna up because that will be it. Uh, so this is where the rally stops being healthy, where you clearly see that a lot of leverage is getting into the system and the smart people are exiting. Now, this was the capitulation signal. Two things happened. 8.95% का पहला fall आया July 13th को. Ideally, any trend following system यहीं पे निकल जाना चाहिए था. दो ट्रिगर थे, एक साइड का ट्रिगर और एक मेन सर्किट ट्रिगर. दोनों के दोनों एक ही बार में ट्रिगर हो गए. सो आई एक्सप्लेन फॉर द अनइनिशिएटेड क्या साइड कार ट्रिगर क्या होता है. साइड कार बेसिकली सपोज टू कूल ऑफ द थिंग्स. वो 5 मिनट के लिए ट्रेडिंग को होल्ड कर देता है कि अगर नॉर्मल वॉलेटिलिटी होगी तो साइड का ट्रिगर आपको बचा लेगा एंड देन मार्केट विल रिज्यूम. पर अगर उससे नहीं बचता देन देयर इज दिस मेन ट्रिगर जिसमें 20 मिनट के लिए मार्केट बंद हो जाती है. दैट्स द प्रॉपर सर्किट ब्रेकर. कोरियन मार्केट में ये दोनों के दोनों ट्रिगर एक ही मूव में हिट हो गए बिकॉज सच वाज द वॉलेटिलिटी एंड दैट वाज अ टेल साइन राइट देयर दैट इट्स टाइम टू मूव आउट. एंड ट्रेंड फॉलोइंग सिस्टम्स या तो इससे पहले या अराउंड दिस टाइम पे एग्जिट कर देते and you would have still made a lot of money. You would have kept all the money. So the selling was too fast and too broad to be calmed by just the soft pause. इसलिए दोनों इकट्ठे ट्रिगर हो गए. Now, then the loop happened. Got a pretty intelligent audience here, तो मैं ज़्यादा टाइम नहीं बिताऊंगा इस पे. होता क्या है? You must have seen that movie, The Margin Call. This basically becomes a vicious loop. पहले prices गिरेंगे, margin calls trigger होंगी. And margin calls भी कितनी trigger होंगी? I was shocked to see the figures, यार. 1.2 million leverage accounts were hit by margin calls. I don't think in history ये कभी पहले हुआ होगा. I mean, I don't know, 1929 के depression में हुआ हो तो we have no data around that. But basically, the entire country was leveraged long on Korea, it seems. प्राइस गिरेंगे, मार्जिन कॉल आएगी. मार्जिन कॉल आएगी, फोर्स लिक्विडेशन होगी. फनी थिंग, द विशियस साइकिल, फोर्स लिक्विडेशन से प्राइसेस और गिरेंगे, फिर दोबारा से बाकी लोग जो बचे हुए थे फिर उनको मार्जिन कॉल आएगी. दिस बिकम्स अ बैड साइकिल. बेसिकली मुंबई में इसका टर्म है, दे कॉल इट माल फूटना. This is where the actual mal futna happens and you have to sell your good stocks to cover for the margin and a clear blow up happens. So $284 million forced liquidations happened in just the first 10 days of July. This is very interesting. Then the second wave happened. And this is what Nassim Nicholas Taleb mentions in his book called Volatility Clustering. आप लोगों ने ये देखा होगा 2008 के क्राइसिस में भी. पहले फॉल में जो डैमेज हुआ तो वो तो ठीक है. The real damage actually happened for the bottom buyers. जिन्होंने वो dip देखा, crazy dip था. They thought this is a once in a lifetime opportunity to buy and they went long. I read this book by Jesse Stein. He was a phenomenal trader. I highly recommend his book, Insiders by Superstocks. He got decimated क्योंकि वो dip खरीद रहा था और leverage पे खरीद रहा था. And then the second wave hit him. The second wave of the Lehman Brothers collapse, the Bear Stearns, Bank of America, AIG, you name it. Basically, the whole subprime mortgage crash, the second wave basically sucked everyone in. And he was decimated. He lost 70% of whatever he had earned. And he had earned quite a truck. So fascinating. Same thing happened in Korean game as well. The second wave was the one which basically destroyed the entire game. And so you heard stories of now people committing suicides, and basically everything got rogered. So we did this very interesting exercise. Let's say if we run the same move through Nifty, what would happen? No, I'm not recommending. This is not a buy and sell advice or anything. Please consult your advisor for anything. We're just having a hypothetical mind simulation. अगर यही move Nifty पे हुआ, Nifty would be at 53,760 in 6 months. Wow, that is 11 Indian market cap would be $11 trillion economy. We will be the third largest economy in the world, US, China, and then us. So this is the kind of unprecedented move that has happened. And वो भी 6 महीने में. That's the main point. That is what the parabolic nature of the move was. And this is the reason Varanya's joke lands perfectly. It is very difficult to not participate when your entire country is basically doubling. Now, I tweeted this very interesting thing. Thank you for making the word situational awareness an ironical word. And this is where it gets very interesting, guys. You know, when you are 4x leveraged, you're bound to fall flat on your face. And, you know, this may sound very arrogant because I'm a nobody and I'm not a hedge fund manager managing billions of dollars. But this guy, Leopold, I can't even pronounce his last name. I'll give it a shot. Aschenbrenner. Leopold Aschenbrenner basically is a 25-year-old young kid who wrote a very nice academic paper predicting that AI will be the future and the conventional software companies would face a lot of problems. His epiphany came true, and he was able to raise $250 million something, and then played that bet with crazy leverage, and that bet worked. He made 439% returns in a very short period of time, in 6 months actually. Now, my question is, and this may sound very arrogant, what's the big deal in there? When you have 4x leverage, let's take example of our MWM as a product, the momentum product. 2017 was a triple digit return. 2023 was a good year. 2021 was a good year. Just imagine if I was 4x leverage while doing that. What's the big deal? We would have received reached 400% return as well in the Indian market. ये तो यूएस पे था जहां पे AI बबल चल रहा था. SanDisk went 50x. So what's the big deal in achieving 439% return when you don't have risk management matrix? 4x leverage ensures that you don't have risk management matrix. This is crazy. So he went long. So let me tell you the trade. The trade was he went long the AI stocks and went short the conventional software. It worked till it worked. Korea crash happened. The ripple happened in US as well. He had double whammy attack. Uh, Normal software companies started rallying, and the AI company started going down. And then he had the margin call. And then there was no one in town who could save him. He gave a call to Citadel. Citadel, smart guy that Ken Griffin is. He did the calculation in one night itself. There's a fascinating video where Ken is talking about it. In one night, they calculated everything. They saw the papers, they saw the books, the files. He gathered the team of people, flew in people to make sure एक रात में वो सारा data check करें, due diligence करें, and they bought it. Next day, Citadel basically calmed the whole thing down. Situational awareness was sold to Ken Griffin, and Ken Griffin made a fortune because, as we know, the markets have rallied since then. 25-25% सारे AI stocks उसके बाद भाग चुके हैं. But the lesson on leverage, you get fucked with leverage. Do you guys know Berkshire Hathaway, the famous company of Warren Buffett, had 3 partners? Not many people know this. We know Charlie Munger, we know Warren Buffett, of course. किसी को तीसरे का नाम भी नहीं पता. You know why? Again, the same problem. That guy was in some rush to get rich. He was leveraged. He was so leveraged that he blew up, and Charlie and Warren had to buy his shares to bail him out, and he was out. That is the problem with leverage. So this is how it stands as of July 30th. The game is that Kospi basically closed at 5593. It is still up crazy 70% from where it started. So the party is not over by any stretch. The excess is out. The leverage positions are out. Uh, the prime minister came on TV and apologized for creating such crazy products. They actually ended up creating single stock leverage products as well. उन्होंने Samsung 3X हाइनिक्स 3X भी बना दिया था. मतलब मार्केटिंग जब कोई ऊपर जा रही है चीज तो कुछ भी चेपते जाओ. So they have apologized for that and they have stopped that. The leverage positions are out. 90% of the leverage positions are out. And if you ask me if I'm the speculating guy, I don't think the AI party is over. But of course, this is just a speculation. कुछ भी हो सकता है. You should follow the system that you have. So this is what we have as a presentation. The last slide that I have for you, uh, actually second last, is this. I think the unprecedented times that we live in, timing is the only solution. If you're not timing, you're missing the point. See, I ran this poll on Twitter. 10-year SIP were net negative in the year 2020. Across all the large caps, mid caps, and of course small caps की तो लंका ही लग गई थी. That is 3 times the average SIP holders discipline. Average SIP कोई बहुत disciplined लोग भी 3 साल से ज्यादा नहीं करते. कोई अगर 10 साल तक नेगेटिव एसआईपी पे है, उसने अपनी बेटी की शादी के लिए एसआईपी लगाई थी या बेटे की एजुकेशन के लिए लगाई थी. नाउ व्हाट? वो तो जो लॉलीपॉप आपको दिया था उसका क्या? वुड यू स्टिल होल्ड ऑन? सी this poll, I don't believe in this poll's results. There are 25% people who say that 50% से ज्यादा लोग 10 साल की सिप को कंटिन्यू रखेंगे नेगेटिव देखने के बाद भी. मैं किसी एक को भी नहीं जानता जो रख पाएगा. So yeah, writing is on the wall. You need to be a timer. SIP पे तो चलो फिर भी ठीक है. In your lump sum amounts, if you're not timing it, you're doing a disservice to yourself. You cannot have crazy 40, 50, 60% drawdowns on your lump sum amount because we live in unprecedented times. Crazy moves happen. Decade-long moves happen in 6 months. So we did this exercise. अगर कॉस्पी पे हम अपना सिस्टम चला रहे होते तो उस पे हमारे बाय सेल्स कहाँ आते. So you see those smiley with hearts. These are the buy signals. There are 3 buy signals that came, and you saw that you see that other smiley. Those are the sell signals. So trade 1, trade 2 would have been profitable. Trade 3 probably would have been slightly profitable, or let's say if you didn't get your fill, then you would have exited at the same price you bought. My point is trend following is the only way to ride these bubbles, and we are in times where bubbles will keep happening. With that, it's a wrap, guys.
Thanks, Manish. Few points I will also raise. Let me just share my screen once. My screen is visible, Manish?
Yes.
Okay. So as Manish said, see, a lot of people don't believe in trend following. They are value investors, where they are saying that we try to value a company and we buy it when it's cheap and we sell it when it's expensive. Okay. If you look at traditional valuation matrices, say, let's pick up the example of SK Hynix. This is starting from say 2025, 275,000. Let's just round off 275 went up till 3,000, right? Almost 10x in 1 year. Now, a lot of valuation guys would have sold it somewhere here because they would say, "ये हमने लिया था काफी बढ़ गया है. Now it's looking expensive to us. We are out. If I look at just the PE multiple, even here the PE multiple was not that high actually. Now, how do you protect yourself from this if you are a value guy? How do you, and also if the valuations were high, how do you participate in this rally? Because both sides you lose if you're not a trend follower. So to each his own. First thing is, this is the market. Everyone has their own opinion and their own right to do things the way they like to do it. What we are saying is, don't, if you want to miss the rally, well, that's good enough, good for you, but don't miss these kind of rallies because they come once in a lifetime. But if you are participating in something like this, also have a plan on where to exit or how to exit. uh, if you are a trend follower, see these lines. These are just simple moving averages. Here it started turning. This is 10-day moving average. The 21-day moving average also started turning. Somebody could have taken a call that, okay, things are not looking that great in this region and sold it off. You don't need to wait for all this to happen, all this crash. Obviously, you cannot sell at the top. You don't know when the top will be made, but you can somewhat come out at the right time and say, okay, enough has happened. Maybe let me protect myself now. I don't know whether it will go back up or go down further down from here, but it is possible to do something like this. Same with, say, something like Samsung. Uh, Let me open Samsung stock price, Samsung Electronics. Okay. Yeah, very similar kind of action happened here. If I'm going to participate in this rally, I need to be prepared for how will I exit when this downfall happens? Because these kind of stories you'll always see in stock markets, not just on stocks, but on indices as well, on gold as well, on silver as well. That is why, as Manish said, we have a core belief in exiting and timing it. When we say timing, we just have an exit in mind that, where is it that we put a stop and say that, we are out. Second thing, debt and leverage are basically drugs. Okay. When they are making you feel good, you feel on top of the world when they are working. When you get used to it and it stops working for you, you become miserable. So you have to take a call whether you want to go into that or not. We will always be on the side that don't do leverage, do come what may, because you don't know what the future holds and how it will impact you. If you're going into leverage, you have to have some plan in mind of protecting yourself. Uh, History teaches us these lessons again and again. I always used to wonder. There's this theory about steel companies that steel companies increase their capex only in good times. So I used to wonder why is this the case? Aren't they smart enough to realize that when the market is bad, that is a time you should spend more money, and when the market is good, you should actually reap the benefits. But the reality of life is the funding is not there when the market is bad. The funding comes when the market is good. No banker will give you big loans when things are not moving. The bankers will give you loans when things are hot. Okay, so all the steel companies will always have capex done right at the peak of the market. They will have all the big capex being done there at that point of time. So we have to learn from them, and then the cycle turns, and suddenly everyone is sitting on unutilized capacity. So we have to learn from history and not go into debt and not go into see what has Warren Buffett done that is different from everyone else. He never goes for leverage. He goes for leverage only to the extent that his own cash flows can handle it pretty well. He will never, he always says, I'll always have this much cash on my book if come what may, because I don't know what the future holds. And if things go really bad, I don't want the company to go down. So if you are working with that mindset, you need to have longevity in your head that you are not in a hurry to get rich. And you have to realize that there are pros and cons of debt, more on the con side. In fact, if you look at Warren Buffett's track record on his investing career, he used to sell off very quickly. Even something like there are only 4 or 5 investments that he has kept for a very, very long time. Otherwise, his favoritist investments also he sold off because Apple is a case in point recently. He was the largest shareholder at one point of time. Now he has sold off most of his holdings. Why? Because he said that the things are going crazy. So you need to have a plan. So he, according to us, he's also a timer, but he's a timer on the valuation side. He doesn't earn on his valuation part and he exits. So yeah, we believe in timing and we feel that everyone who's investing should have an exit plan and protect themselves. Yeah, so that's it from our side. If you guys have any questions, we are open for it. Just one small request, just if you could just speak out the question instead of typing it, because we are recording the session and it helps us when we put it online.
Hello.
Yeah, hi.
Hi. Manish, can you hear me?
Yes, I can.
तो जैसे भी आपने जो ये कॉस्पी का चार्ट डाला है मतलब आपको बताने की जरूरत नहीं है पर इट इज वन ऑफ द बेस्ट चार्ट फॉर ट्रेंडिंग बेस्ट इन द सेंस मतलब ट्रेंड फॉलोइंग के लिए ये बहुत अच्छा चार्ट है the negative which I lived with for trend following was like in Indian market of 2018-19 thing. There were lots of withdrawals in during that period.
Yeah, that's true.
That is
choppy
a
markets.
हाँ, आप सही बोल रहे हो। तो कॉस्पी का चार्ट मैंने इसलिए डाला बिकॉज कॉस्पी का हम डिस्कस करने के लिए आए थे यहाँ। That's what the
बराबर है।
presentation is. And
Oh,
remember, my friend, whenever there is a parabolic move, craziness, अभी आप सिल्वर का चार्ट लगा के देखोगे, you'll see the same thing. Trend following
okay.
is the best way to ride a trend. सिल्वर पे भी आप देखोगे कि एनी ट्रेंड फॉलोइंग सिस्टम, कोई सोफिस्टिकेटेड ट्रेंड फॉलोइंग सिस्टम की भी जरूरत नहीं है। नॉर्मल सुपर ट्रेंड लगा के भी अगर ट्रेंड फॉलोइंग सिस्टम आपने बनाया है, पोजीशन साइजिंग
बराबर
डिफाइन करी है, अपना एलोकेशन डिसाइड किया है, एग्जिट डिसाइड किया है, कितना डालना है डिसाइड किया है, दैट्स इट, you would have made lot of money in silver as well. Anything that trends, a trend following system will be your friend.
And to
exactly.
add to that, see if my screen is visible to you, Rajesh. Uh, see, this is 2018-19 time, right? Very, very difficult time for trend followers. But if you still have a plan in mind, say, for example, let's take one simple logic. Say somebody says, I will trade only when 10 days moving average is above the 20-day. So look at this part. This one gives you one trend, trend ends. Another small trend, trend ends. This a big trend, trend ends. Here, obviously, it was very bad, very choppy. You would have been chopped out. But another trend here, it ends. Another trend here, it ends. So it just depends on how you are defining your trend. If you're doing it on weekly, I think weekly still there was some kind of trends available in this market also. So it really depends, but yes, point taken. 2018-19 was very difficult for trend followers. In fact, I'll say it was difficult for the entire market. Nobody was making money at that time.
I don't know any strategy that made money in 18-19.
Yes, one of the reasons
Exactly.
that 2020 was so bad was because nobody was ready and sitting on cash. 2007-8 crash, a lot of people were on cash because they realized that 2007 was a crazy year. But 2018-19 were not crazy years. So nobody had made money before the 2020 crash. That was most of the people were starting to think that, okay, things are improving now. So a lot of people were fully invested. And that is why that crash was far crazier because everyone was caught off guard. So yeah, I mean, it was a difficult time. Yeah. Any other questions, please?
Yeah.
Basic,
Hi,
can I ask
I'm
question?
Manish.
Please.
please go ahead.
I have not read anything about this Korean market or anything. Any impact on Indian market has been, because I've not been following for the last couple of months.
So
Indian
the
market,
direct,
or you see anything which can have an impact here because
Yes.
of this?
so the direct impact.
One realization that hit me is that Indian IT is inversely correlated to all the AI stocks. So
Yes.
when
So that was
AI
a
stocks
trade.
are good,
That is the trade. You, every smart person was out of IT when the AI boom was happening. Direct uncorrelation. And if you've seen with the AI crash, the index itself, by the way, Nifty IT has went up 20%.
yeah, but see, that's the thing. If it is inversely correlated and things are the AI party is not over yet, then this IT will go back down again.
Correct.
From a long-term perspective, see, the major impact that can happen is not because of Korea, because Korea is not that big a market and not that much participation outside Korea. My worry is more around same things happening to the US AI stocks. If that happens, maybe we'll see some impact in India also because of the liquidity that might go away. But Korean market, I don't think will have that much impact in India. But yeah, for the IT thing, that's a realization for us that AI stocks are inversely correlated to Indian IT. If AI stocks don't do well, Indian IT might just outperform. Second thing is, I mean, generally the world markets are not looking that great, at least to me. But I will change my mind if things go back to normal and they can go back to normal very quickly. But right now, not that great according to me. So I don't know. But yeah, Indian markets are not overvalued. I'll say they are not in the overvalued territory. But US is. If you read our newsletter, S&P 500 is now 30 times earnings. 50% of the S&P 500 is in just 10 stocks. So that is what scares me a little. But yeah, that is US. You don't know how long the party can last. But I am a little more worried about the US market.
Okay. Thanks.
Hope that answers your question. See, nobody can predict what the impact will be. As we said, we have exits in mind. A lot of our holdings we already sold off last month in our mutual fund part because if you look at the defense index or the pharma index that we owned, we have sold that off for most people. Defense has come down. Pharma is still doing okay, but yeah, if things improve, we'll probably enter again.
Okay. Thanks.
Yeah.
Hi, Varun. Morning.
Yeah. Hi.
How to read this timing part compared to the other general principles which are recommended, like time in the market is more important than timing. And also, I was reading this book called Just Keep Buying. He has substantiated with a lot of data as well. It doesn't matter if you're doing SIP, or he would suggest even that lump sum. As long as you have money, you just keep investing and don't look, as long as your goals are a little far away. So I'm unable to make out of mind how it should be. Should we be in the timing market, or just keep buying, and then if the goals are near, then switch over the funds to debt funds and save the money for goals, whatever we are planning for?
Yeah. So see, where does the concept of timing come in? Okay, let's look at Nifty. Okay, let me change the page. Let us look at the monthly chart of Nifty. So we have data since 1990 July. Since July 1990, the CAGR is 13%. Okay, so a buy and hold strategy where we don't care about timing and where books are saying that you just keep buying or put in money and forget it has made 13% from Nifty. This 13% journey is full of downfalls. If you look at this one, this is what, 60%, 61%. This is around 35, 40%, and some more during the journey, 25, 30% falls. There are all kinds of people in the world. If you are the kind of person who doesn't care about these falls, 60%, 40%, 50%, well, if you believe in the India story and you say that I don't care, markets are always up and down, I'll just stay invested, then that money is yours, that 13%. What we are saying is, and what the data says as well, people don't behave like this. People behave very differently when markets are fallen. Uh, Even the mutual fund industry knows this, that when markets fall, SIPs will be stopped, money will be withdrawn. But why is the market falling? Money is being withdrawn, right? When people do redemptions from their scheme, that is why the market starts falling. There is no money to be invested in the stocks. So that is why the prices are falling. At that point of time, most people behave in a way that, I want to protect myself. I have seen a lot of fall. Let me come out. Stocks are horrible. News becomes very bad, and it becomes very difficult to stay invested. If you are the kind of person who doesn't give into that, timing is not for you. But the data says more. So recently, I think Kalpen Parekh from DSP gave this presentation that most of the people who ever invested in their flexi cap fund didn't get that return. And there were lakhs and lakhs of people. Most of them didn't get that return. Manish is a sitting example. Manish used to run this small case where the returns are around 27% since 2017. Only 6 or 8 people have got that return, and most of them are family. So that the problem is not that we should or shouldn't time. Problem is what is our nature like. If we are going to behave badly when things are bad, timing is for us because that will protect you from the fall. If you think that you are the kind of person who thinks like Warren Buffett, who has understood the idea of buy and hold, and I don't care, even if my money goes down by 60%, timing is not for you. What I'll say is, if we do a good job with timing, we might just beat the CAGR pre-tax, right? But that is not the criteria. The criteria is first to get those returns, because what happens is if you had a very bad experience in the market, you will not come back. A lot of people just give in and they just say markets are not for me. I don't care. Let me put my money in an FD. Manish, if you have anything to add.
Yeah, precisely this point. You covered it beautifully. The point is, this is a wonderful book that you referred to. Just keep buying. It's like saying, it's like saying I read a book in a book that how to hit a pull to a fast bowler. वो बुक पढ़ने से पुल मारना नहीं आएगा यार, क्योंकि when a fast bowler balls and the ball passes through your lips at that crazy speed and you actually run a risk of losing all your teeth, वहां पे अगली बॉल पे हाथ पैर कांपने शुरू हो जाते हैं. And so the practicality of it is that like Varanya said, if you figure out yourself that you're the kind of person who will be able to handle all the vicissitudes of the ups and downs of market, this 13% is yours. But the data suggests uh, that average retail gets half of this. Let that sink in. 13 का आधा कर दो सर. 7-6%, that is the return that average retail gets, which by the way is less than the FD return. So let me put it this way. An average retail guy is much better off putting all its money in an FD rather than equity. Nobody will tell you this, क्योंकि the problem is we suffer from confidence bias. हम सोचते हैं कि यार वो तो generally true है. I am in that 10% bracket जो सारा drawdown झेल लेगा. And the funny thing is 90% of us think that we are in that 10%. So that's the thing.
No, and it's an interesting thing. See, I still believe, even after being a proponent of timing and coming in and out, I still believe that if you find one great business, buy the stock and hold on to it for 10, 15, 20 years, there's no better strategy. The question mark is whether you'll be able to hold or not. Because see, best of best businesses, when the bad time comes, it will fall. Now, when the fall comes, even their earnings will not be good, their news will not be good. Let's take an example, right? HDFC Bank. It was a darling of every stock market participant for many, many years. How much has it fallen from top right now? It's just down around 25, 26, 30%. But look at the news around HDFC Bank today. MD is being fired, merger was bad, everything looks bad. It might not be bad. It may still come back up and outperform. But how many people today are bullish on HDFC Bank and they are saying that, okay, no, we'll buy it and keep it forever. This is the problem. If you had invested and now your stock is down 30% from the top, are you a seller today looking at the news? Or for that matter, any other kind of stock which is going through a bad time? There are so many examples of companies that have compounded 30, 40, 50% CAGR, but in that journey, they have fallen 30, 40, 50, 60% many times. What will enable you to keep that and not sell it through that drawdowns? If you have the capability of being put in and being economists around the tops and the bottoms that the stock will make, definitely you will do very well. Our core believers, most people are not like that. That is why most people don't make money from the stock market.
Okay. And does it mean there is any call to again switch back the money to arbitrage?
Yeah, we have shifted a lot of money to arbitrage, especially the satellite part. In the core portfolio, still we have not taken that call. Let's see if how things pan out.
So we are not in any panic mode, my friend. Na hi euphoria hai, na hi the markets are bad. As satellite is like a swing system, so right now at any point of time it can have maximum of 5 calls, so 20% each. And right now none of the calls are active, so all the money is in arbitrage fund. And SIP is still on, like three indices is where we are long: arbitrage, momentum, and quality. Yeah.
And I'll tell you a funny thing. So we've had cases where we gave the sell call and the person was not available, they couldn't sell. Say, I'll take the example of gold. We sold off gold and that person couldn't sell. And now I'm telling them just wait for a while now. Maybe gold might turn around from here. So if it turns around, we'll buy it again. We are happy to look like fools, but we don't want to break our system. When the system tells us that things are looking good, we'll enter. If it's telling us that things are not looking good, we'll exit. We have no qualms in saying that we might do entry and exit in the same stock multiple times because we want to protect the capital first. That's the main criteria. Upside, it will take care of itself. Any other points on your mind regarding anything?
So at least before we leave, guys, it'll be nice if you give us feedback on the presentation and also any key pointers that we should keep in mind for the next session.
Yeah, any topics that you might want us to cover that you might be, looking around. We covered SIP last time, so I don't know.
Probably S&P 500, since you've written about it. I mean, you think that is again that setup also looks crazily valued for you.
Sorry, which one?
S&P 500.
Oh,
You've
okay.
mentioned that in your.
I covered some of that in the newsletter this time. Well, let me show you.
That's what I read it.
Yeah, it's a good topic actually. See, this is the weekly chart of S&P 500. Now, see, even though it has fallen somewhat from the top, it is not.
We're at daily.
Huh? Sorry.
It's a daily.
Let's do daily only. So even though it has fallen somewhat from the top, it is now in a range. It is trading in a range, right? Since COVID, which is a very big bull market according to me, this thing is up. Since COVID bottom, the absolute return is around 246% for S&P 500. Okay. Now, I don't know how sustainable this is as of today. I'll show you one more thing. Is this visible, the chart?
Yes.
Yeah. So look at the S&P 500 PE ratio, just a simple valuation metric. See, this is not a very good data point, but still tells you where things stand. Right now, it is say 29.30. Look at how it has performed when it has come into this territory. For most of its history, it was not in this territory. But as Manish said, recent times things have started getting crazier very quickly. So right now we are in this higher side territory. Forget this one. This was a little crazy because of the crash. But if we ignore this one, we are sort of in the territory where things are on the higher side. Now, look at
Crash nahi rally. By the way, Manoj Dua actually told me some fascinating stories about this IT ka bubble. Abhi ka bubble to looks peanuts compared to that.
Crash rally nahi. This P became 100 because the earnings were not there
Right.
after 2008. Same in 2020, by the way. The P became very high because the earnings were not there. So you can ignore this one and this one, but look at what happened just after the dot-com crash. This is 1999. This is 33 times, 30, 28, 30, that range. Again, this was the crash. So when the crash happens, the PE goes very high because the earnings are not there. But we are sort of in a similar territory right now.
So this is very fascinating data, Varanya. In that case, actually, I read it somewhere. Mark Minervini ke tweet pe yahi aaya tha. Very interesting point he raised. He's like, this bubble is different. I mean, of course, you should never say that. This time it's different is a known top. But he made a very fascinating point that this bubble or whatever rally you may call it is backed by actual earnings. इसीलिए पी नहीं क्रेजी हो रहा. Look at the money these companies are making.
Yes, but there are 2 points. See, it is not in uncrazy territory. If it was somewhere around this region, below this line, below 20, I would say okay, there are still things are still okay. But it has sort of started inching towards the higher side, right? Another second point that I'm worried about is most of the earnings are concentrated in top 10, 15 companies. So 50% of this index is 10 companies today. Now 50% in only 10 companies is what worries me more, because any stupidity happens in those 10 companies, which is basically AI and related stocks, things will go very bad. So I mean, let's pray that nothing bad happens, but say something, this goes even crazier, things will start looking crazy. And when things start looking crazy, that is the point when all these leverage products gets launched. All the people will launch funds around these companies and tech bubbles and stuff like that. Obviously, we don't know if it will happen or not, but yeah, just good to prepare yourself and have a bit of perspective around this. On the flip side, we can argue that AI is a new technology and it has a bright future. Well, internet was a new technology, had a bright future in 1999. My gut feel is we are back to that same era, 1999. If it will get popped, when it will get popped, nobody knows. But it looks like similar stories. Anybody starts a business, just the word AI will give them a decent valuation today. So not a great great time to be a participant in. But yeah, as long as it's working, it's working.
And what about Nasdaq?
And do you guys feel?
I mean, Nasdaq
Sorry.
Composite Index is also this way. Nasdaq Index.
I have not analyzed so much. I think Nasdaq 100, right?
Yes. Hold on to the second question. I missed that one. Somebody else asked the question as well.
Yeah, I'll speak next.
Yeah, please ask. I'm just opening and trying to see.
Yeah, I just wanted to understand, like you guys are in market and you read a lot of history books as well. Such blatant manipulation was seen even in the past. Trump आएगा एक tweet weekend पे tweet मारेगा, and then these blatant trades, and then also even at index level, people are bending too much that SpaceX is accommodated even without
So I'll tell you an
rules.
interesting point. This is a very interesting discussion. My point is little contrarian. And my point is Trump has not done anything new. It's just that he's loud and visible. ये सब behind the scene तो बचपन से होता आ रहा है मेरे दोस्त. People in the know plant the news to offload their product. People in the know again plant the bad news to buy their particular stock. This is as old as hills. ये तो stock market की start से होता आ रहा है. Trump is just doing it blatantly and openly. उसको कोई शर्म ही नहीं है. That's the only thing that's happening.
Bang on here. So I used to work in banking, and interestingly, I joined in 2010. That was right after the big crash happened. So I used to hear these stories, what the world was like in 2006, 5, 6, and 7. So everyone used to tell me, we used to go to office, make money, come back home. That's it. Every Friday was a five-star hotel party. This I'm talking about Singapore, not even the US. US, it would have been even crazier. So everyone used to tell me every Friday was an open bar for the entire company. Anybody can come have as much as they want, go back home happy every Friday. And what did it lead to? In 2010, when I joined, they stopped having Christmas parties also. so so I think it's the same every time. Every bubble is similar. How the participants change, the stories change.
I remember
But
I remember I was in Amex in 2008 and they gave us laddu for Diwali. Can you believe it? No gifts, nothing. Laddu दे दिए. मैं बोला अबे ये कैसा डिप्रेशन आ गया भाई? That is just that is
yes,
how it works.
banking became such a
आजकल
bad
आईटी
word.
कंपनी में कुछ नहीं दे रहे हैं.
Yeah,
वो ऐसा
same,
सिचुएशन.
yeah, same for IT today. So I remember they when I joined the first day in induction, they gave us all these little goodie bags and water cups and whatnot. I never used that water cup because there were cups available in the pantry. One fine day, we get an email from tomorrow, no more cups will be available. Please bring your own. so, so yeah, things go very crazy. And the manipulation is always there because if the manipulation is not there, the bubble will not become a bubble. See, bubble happens when everyone gets sucked in, that everyone starts believing that story. So who is the one selling that story? That is a person who's manipulating at that top. They are selling off their holdings. Now coming back to Nasdaq, see, you can see the weightage. Nvidia, Apple, Microsoft. Just if we add these three, this is 23, 23, around 30% is just three stocks out of 100. Another 7, 37, another 10, 47, another 7 is around 54. See, 60% is just 10 companies out of 100, Nasdaq 100. Okay. Now look at the bottom companies. What are the bottom? We won't even hear their names. Copart, Enlam, G. Okay, we know Dexcom. We don't even know these companies. IDEX Laboratories, but they're still big companies. Okay, nobody's talking about them. And look at their weightage: 0.1, 0.2. So this is what worries me. Everything is rotating around these top 10 companies. Anything bad happens, to their stories, things will go bad very quickly. You need just 2 quarters of bad earnings uh, or one regulation from some government somewhere saying हम AI नहीं use करने देंगे या जो भी. In fact, I was having this discussion. So say AI becomes so powerful that government is threatened, that you don't need a government. What happens then? Will the government allow AI to run? Obviously not. So, but that's a possibility. The models are becoming so damn powerful that they can actually take over the government and say, okay, we'll run the government better than you. So what happens in that scenario? So yeah, I mean, God, we are just being imaginative here. God knows what will prick this bubble, or whether it is a bubble or not. But yeah, things are getting crazier.
Correct. Thanks.
Yeah. Any other questions?
Hello.
Or yeah, please.
Any good books which you guys are reading? Maybe you can include that in the newsletter or in
Oh
the
yes.
presentation next time.
Manish reads far more than I do. But yeah, what topic do you want good books on? We can recommend.
No, anything is fine. And even I'm not specific to any particular area. Not too
I
much philosophy, but yeah, other than that, anything is fine.
so I already told you to read this Jesse Stein's book.
See, this is the Jesse Stein book,
Yeah.
Insider by Superstocks. But this is majorly for someone who wants to learn trading or how to trade. If you want books on markets and history of the markets, there are too many. Books on the real story of company growth, if any. Yeah, so Asha ji, any biography of any company owner is a good book. You can read Titan if you want USA companies. Apple story is also there. Elon Musk's biography is good. In India, Dr. Reddy wrote, I think, the Apollo story. That's very good.
This is
Ambuja is
another
also good.
Apple in China is a very interesting book
Apple
as
in
well.
China is a good book, yeah.
Ambuja is also good.
Ambuja story, yes, that's also good. Now there are many available. I read this one book on Haldiram. I forgot the name. That was also very interesting.
Bhujia Baron or something.
Yeah, the Mujia Baron.
Bhujia Parents.
Yes. In India now, many good books are available on these companies and their stories. Yeah, Extraordinary Popular Delusions and the Madness of Crowds. This is a very good book.
Follow this guy Arpit Ranka on Twitter. He comes up with some amazing book recommendations. I've probably read everything that he has recommended.
And
Very
my
good.
favorite book that I recommend that everyone reads once in life is Poor Charlie's Almanac.
Yeah,
But
yeah.
you can see this is 7,500 for one book.
A miser like me would never say this, but you know what? Even at this price point, this is totally worth it.
Yeah, it's a very so this book made me change my career, by the way. So this is an interesting book. So difficult to read because it's not like a normal book. It's a almanac, different talks given by Charlie Munger, and different kinds of articles that he has written. It's a collection of those articles with photos and family photos and stuff like that. But it's very good, very life-changing.
How is Seeking Wisdom? Peter Pavlin's books?
Seeking
Mostly he writes
Wisdom,
on-
I tried. I have not read, but I had read so much Charlie Munger by then that I stopped reading more.
Okay.
But
It's a good book.
It's supposed to be a good book. Yeah. Any other questions or else we just
Yeah, one last question. Manish.
Yeah.
हेलो तो जैसे भी मैंने मतलब आपके ईमेल्स आए थे तो उसमें पोर्टफोलियो मतलब इट इज लाइक मोर सॉर्ट ऑफ 33% इन ईच क्वालिटी मोमेंटम एंड डेप्थ
Correct.
तो लाइक आपने हैव यू डन एनी बैक टेस्टिंग ऑफ दैट थिंग वो ratios बराबर है or something like that?
Yes, we have. I think we shared that with everyone. If not, we'll do it again. Uh, we are at, so there is a small edge around 2% CAGR that gets generated uh, with the timing model, and the drawdowns are lesser.
Let me show it right now. So Rajesh, this is the back test.
Okay.
I'll show the table only. So this is Nifty, this is Nifty 500, this is Nifty small cap, this is Nifty mid cap. These are the returns. This is since 2013 because that is when the data is available from. This is what the portfolio generated, and these are the drawdowns. So you see, we are focused more on this number rather than this number because this is with 30% cash, by the way. So because we have 30% cash, and in spite of that, we are doing somewhat better than most of the indices. We believe that if we do a little bit more timing on that, that on the bottoms we buy, then we might just beat the indices as well.
Okay. नहीं मैं मतलब एक I was asking for more sort of like that ratio thing 33 or could it have been like 40 20? Have you done something like that?
No, we haven't done that. We have done 35, 35, and 30, and that is this test.
Yeah, the idea is to use that debt sleeve to deploy into drawdowns because
Okay.
20 पे
Okay,
तो
okay.
बहुत कम हो जाएगा.
Understood.
See, we are not proposing that we keep this cash forever. The backtest is just for our own understanding that if we keep the cash forever, what happens? But we took a call in March this year. We deployed 15% of that 30% into the core portfolio.
Okay, okay. Understood. Yeah.
Great. Yeah, if there are no other questions, I think we'll end. Manish, anything you want to add?
No, nothing. It was fun doing it, guys. Thank you for giving us your time and have a great weekend ahead.
Yeah. Same to
Yeah.
you.
Thank you for joining, everyone.
Thank you.
See you next time. Thank you.
Thank you. Thank you.